Good afternoon to everyone. My name is Marco Angeben from European Data Warehouse. I'm the project coordinator for Engage for ESG. We will allow a couple of minutes so that the participants will be able to dial in, and then we will start the webinar. Perfect. Good afternoon to everyone. So welcome to the Engage for ESG webinar of the 30th of October 2025. Again, this is today the last webinar of the year, but it's very important to continue focusing on how we can help to simplify the reporting for ESG generally. I should say a couple of things before we get started. So the session is recorded. Also, the slides will be made available on the Engage for ESG website. So you don't need to take notes. And I think most importantly, we need also, you can also potentially ask some questions. You can ask some questions in the chat, and we will try to respond. We will keep the webinar to 1 hour, but also please feel free to contact us. We are delighted to have also together with us today Raffaella Calabrese. She is the chair of statistics and data science at the University of Edinburgh Business School from the UK. She's going to make a presentation in terms of what is happening in terms of sustainability for mortgages on the other side of the Atlantic. And also together with me today is Vincent Maillet he's the head of energy efficiency and regulatory technology at Hypoport. And Vincent will show some developments in terms of not only the templates, but also why Engage is efficient, why you don't need so many fields or so much information in order to try to be EU taxonomy aligned. So in terms of the agenda, I will basically go through some slides to introduce what Engage for ESG is. And then we look at the climate stress testing. That's a very hot topic, clearly, in terms of how does affect the full probability for homeowners in terms of various aspects that can be considered. Then we are going to focus on the latest version of the Engage templates. This is regarding the renovation and also the portal that is used to collect the data from the various parties, including not only banks and lenders, but also from interested investors that want to see their taxonomy alignment or other checks or data quality checks performed on portfolios, securitization, or covered bonds. Last but not least, also, we have a very few words in terms of how you can get involved in the Engage initiative. Good. So, what is Engage? It's an initiative that is being co-founded from the European Union. We are now at the end, almost at 3 years of the of the initiative that includes 6 partners: European Network House, includes Hyperport, NN Bank, Wonu, Dexai, Kaspersky. Uh, and it's really about how we can improve and simplify the reporting in terms of ESG, while at the same time being compliance with or aligned with the EU taxonomy, the General Data Protection Regulation, as well as the Energy Performance of Buildings Directive. Please note that this regulation and directive are also very much into changing modus, in the sense that the taxonomy regulation is going to be revised probably at the beginning of the next year, and also the EPBD4, the recast, is also going to be under revision. So you can understand that also the rules are not set in stones and are also relatively dynamic. But why using European Data Warehouse, and most importantly, Engage for ESG or the Hyperport or the Engage portal? Well, because you can take into consideration, and that can be used for the green asset ratio calculation, for transition risk management, physical risks, etc. So the reality is that we have translated the regulation or the directive in actionable fields where you need to report certain type of information, and we also have divided the fields in various sections in a way that you can really then slice and dice the type of information that you want to report, like, for example, do not significant harm, substantial contribution, CO2 emissions, and so forth. Okay, so in terms of from a high-level perspective, as I mentioned, at the top we have the legal and regulatory layer, i.e. the GDPR, the taxonomy regulation and delegated acts, plus the EPBD4. And the whole construct, you can see it in the middle, is really based on two key pillars. One is the disclosure template for raising mortgages data. So it's very important. This is for residential mortgages and as well as renovations. And then we have the other important key layer, which is the portal, which is the infrastructure to collect in a centralized manner all the information. Plus, we have 2 pilots. One that is covering Southern Europe, i.e. Portugal and Spain, and the other one, NN Bank, that is covering the Netherlands. Who is going to benefit from this? On one side should be the investors, because then they have a European standardized and harmonized template for the disclosure that has been also checked and overseen from the various regulators and central banks. And also, who should benefit is the borrowers, because if they have a EU taxonomy aligned loan or mortgage, they should be able to have lower interest rates, or they should be also, in case the building is of low efficiency, they could probably benefit from the fiscal measures that are being implemented across countries in terms of fighting energy poverty and the renovation wave due in 2050. So how we built the Engage templates, and this took over 2 years in the making, is really starting from the best practice of the ESMA underlying exposures for residential mortgages, i.e. Annex 2 and Annex 6 for consumer. This is a detailed information whereby the entities have already been reporting according to these standards, regulatory standards, I should say, for the last few years. What we have added, which is building block 1, is really the part related to the compliance to the taxonomy regulations and various facets. We go more into the detail. You will see Vincent will explain more in detail the whole development. So for the mortgages, in terms of acquisition of new buildings and existing buildings, new buildings means buildings that have been built after 2020, and existing buildings, it means that buildings that have been there for longer. And on top today, we are really going to be focusing on a part which is very, very important, because this is not collateralized, and hence usually the interest rate and the capital is usually lower and interest rate higher. So are the loans for the renovation of existing buildings. The other building block that we have been working on, and is very important, is also the green eligibility checker. from the European Investment Bank in terms of potential third-party public funds for the green financing programs of the renovation wave. Then next, the other key fundamental building block of this whole initiative is also the portal, because the portal is the infrastructure that helps to collect the data, check it, and the infrastructure that is also creating and producing two reports. The first one is a data quality report, so it checks that the information is consistent across submissions and across loans in the various fields that are required. And the most important, which is the EU taxonomy alignment report, which shows for different things the percentage of the loans that are taxonomy aligned, the one that are not taxonomy aligned, and why. So in a sense, also you can use the portal in order to improve the data quality and also the data richness of the submissions of a specific portfolio. Doesn't necessarily need to be a big portfolio. You can start very small, and then you can increase it over time. How do you have access to the portal? Well, you need to sign a very simple legal agreement, and you will have then a free access to the portal. You will have a special private area within the portal where you can upload the various documents and detailed information. I'm also happy to report that earlier in October, we onboarded a new client, a new bank lender, very important in the sense that now we are extending also our outreach to another country, which is Belgium. Onesto is not only running some mortgage lending in Belgium, but is also a mortgage lender which is very much focusing on reducing energy poverty and improving energy affordability in terms of reducing the monthly bills that the homeowners need to pay at the end of every month. Thanks. And now I'm delighted to pass the ball to Raffaella Calabrese from the University of Edinburgh for her presentation on the climate stress testing.
Thank you, Marco. Thank you for having me today. So I'm going to be brief. Sorry, I think I have a lot of slides, but I'm going to just explain the framework. So in this presentation, I'm going to show some results about US data, as Marco explained before. But we are doing the same with European Data Warehouse for the UK. So we are using UK data. So in this presentation, what I want to explain is more the framework. So how a bank should implement climate stress testing. So banks are familiar with stress testing. It's something that they've done already. But the idea is specifically how they can design the scenario and how then from the scenario they can estimate the damage function, and then how we can use this damage function in order to update the loan to value, so have a climate adjusted loan to value, and then in this way we can obtain a climate stress probability of default. So this is a kind of exercise that banks can implement when they want to perform a climate stress testing. Next slide, please. What we are doing here, we are just considering physical risk. I think it's obvious why we need to the importance of this kind of exercise for financial institution. So next slide, please. And there is already some literature on climate stress testing, but the main problem of this literature is that it's not it's not clear how the damage function then is plugged in the scoring model. So I think what we want to do is make each step clear in a way that the bank is able to estimate all the aspects of the climate stress testing. And also we want to be able to create the different stress scenario for different return period, because if we think is that we are going to consider physical risk, that they are going to be more and more severe. So a bank needs to be able to control this scenario and understand this one instead of just importing them from data provider. Next slide, please. Okay, so in this study, what we are doing is that we collect data from Freddie Mac in Louisiana, and specifically we analyze hurricane. And we consider, so when we speak about stress testing, so we stress the physical events, so we consider different return periods. So how these events become stronger and stronger. And I think this is an important exercise that usually banks, they don't do in-house, but they let other data providers do it. So next slide, please. So as you can see, we start with the data. So we have the loan level data, okay? And then we merge this data with historical tropical cycle events, and we estimate the damage for the future. Then for that one, we use all this information to estimate the credit scoring with or without the climate events. And then we estimate the damage function, and then we plug the damage function in the scoring model in order to stress the probability of default. And then we have the different probability of default for different area. Next slide, please. Next one, sorry. Okay, so as you can see here, we need to collect, so the problem of this kind of exercise is that we need to manage big data set. So we have the data set from Freddie Mac. There are 3-digit zip code. So we consider just the first 3 digits of the zip code, and then we merge this one with data from National Ocean and Atmospheric Administration. So these are data on natural disaster, on the hurricane. And also we want to see the impact on insurance, so how that one can mitigate the effect. And that we have, we collect data from the National Flood Insurance Program. We also have the First Street Foundation data, and then we have some macroeconomic variables from the Bureau of Labor Statistics and also the House Price Index. Next slide, please. So this, I don't want to be too technical, but this is when we estimate the scoring model. So we just use a survival approach where we estimate if someone is going to repay a loan or not, and also when. And you can see that here we have some variables that are related to the tropical cyclone, and with a damage index, and also a function related with the insurance. So if that particular area has been insured or not. Next slide, please. And if you think the aspect of the insurance is very important, because also in Europe now there is all the debate on the insurance cap. So do we need, there are some areas that maybe we need to make insurance mandatory in order to have a mortgage or not. So you can see here that when we include the climate variables, the models, they perform better. So this means that the bank can better predict if someone is going to repay a loan or not if we include the climate variables. Next slide, please. Okay, so what we do here we start, this is the climate stress testing part, where we start performing the scenario. So we create in-house the scenario, so we consider the synthetic tropical cycle regeneration model, also known as NORM, and with this one we create the scenario for different return period for the specific extreme weather events that we are considering, that is tropical cyclone. So you can see that higher is the return period, stronger is the event, and as you can see, the area that are most affected are the coastal area. Next slide, please. Okay, so then we use this scenario, we start from this scenario to consider the damage function, and the damage function that we can produce are at the zip code level. So it's obvious that here we have all the problem of merging the data because they are a different level. And so you can see how, starting from the scenario, then we can estimate the damage function for the different areas. Next slide, please. And what we do then is what I mentioned before, we compute the loan to value. So the loan to value is one of the important variables for the scoring model, and we adjust the loan to value taking into account climate change. How we do that? The climate events. So the numerator is the same. Then we adjust the denominator. So we have the value of the property, and we adjust the value of the property, taking into account the damage. So we estimate the value of the property knowing the house price index, and the damage function is related to the damage index that we estimate in the previous step. So next slide, please. And then we plug in this loan to value in the scoring model that we estimate before. And you can see that these are the map. So unfortunately, we have only macro area. So these are really big. But you can see, so this is the mean and also the quantile of the distribution of the probability of default without climate events. And then when we consider the climate events, and we consider the different scenarios. So for a stronger scenario, when the return period is increasing, then also the probability of default is increasing. And you can see how also the probability of default is increasing more in so here we have the damage index, and here we consider the probability of default, but how this one in the stress scenario is increasing more in the coastal area. Next slide, please. What we want to do here is just to propose a simple framework that a bank can use in order to implement climate stress testing. So what we are doing now, we are using this framework on the European data warehouse for the UK. So we are using the UK data. And it's obvious that for the UK we are considering different kind of climate events. So here we consider tropical cyclone because we use US data. But for the UK, for example, we are considering flooding and different kind of flooding, so river flooding. But we are implementing something similar, so where we first estimate the scenario, and then what we do is we estimate the damage function, and then we use this damage function to adjust the loan to value, and then we plug the loan to value in the scoring model, and we estimate the new probability of default. So the paper is available if you want to have more details, and I don't know if you have any question, please let me know. Thank you.
Thanks a lot, Raffaella. So now over to Vincent. So Vincent, we have now upgraded the templates. We have latest version, which is also including renovations. We know that there are not that many renovations loans, or that the production is more for EU taxonomy aligned mortgages. But can you tell us more what it means, what do we need to report, etc.? Thank you.
Yes, of course. If we can go to the next slide, Marco. Yeah, so very shortly, I think what is really the core of our project over the last 2 or 3 years is the EU taxonomy regulation. Not just for purely reporting or disclosure purposes of the taxonomy itself, but we have seen that the taxonomy is used a lot directly or indirectly by a lot of other regulations or directives or policy objectives in the EU. So it's really at the center of a lot of other frameworks. I want to highlight a couple of them that are, I think, particularly relevant. So the EU taxonomy is, for instance, also used in the EU Green Bond Standard that is really focused on the exact criteria of the EU taxonomy. But we also see, for instance, references in the EBA Pillar 3 disclosure, the SFTR and the CSRD, but also in some of the eligibility frameworks of the European Investment Bank Group or European Investment Fund. And lastly, the one that I've also highlighted here in dark green on the right-hand side is EPBD4. So for those that might not be familiar with that one, that is the Energy Performance of Buildings Directive. It's basically the European building law that mandates that each and every individual building unit should be a zero emission building by 2050 at latest. So you can just imagine the tremendous amount of renovation financing that needs to go there in the coming 24 years so that each building in Europe, irrespective if it has a mortgage or not, is a zero emission building, as that is now a hard law. And one of the elements in EPBD4 is that we need to apply the EU taxonomy criteria. So I think this is two that are particularly relevant for energy efficient mortgages or green mortgages overall. Now, if we go to the next slide, we see here that a little bit on the background of the EU taxonomy. I think most of you already know a little bit or quite a lot about it. It's basically the rule book: when is something green or sustainable or energy efficient. And these are basically the rules to follow. And we follow exactly the regulation here. Now, this might be self-explanatory, but I think one of the elements that we have learned in talking to a lot of banks, what I think sets us apart, is that we really dig into the individual detailed data elements, for instance, for the substantial contribution criteria and the do no significant harm criteria. And other than that, one of the elements that is really, I think, also important for many of our, let's say, customer base is that we always take into account the latest Q&As that are published by the European Commission. Now, over these last 3 or 4 years, there's been quite a substantial body of literature, and many Q&As have been published, almost 2 or 3 per year. And also with many topics related to the real estate criteria. So what happened is that sometimes the analysis or the interpretation of the criteria evolve over time because of, let's say, new insight in some of these Q&As. And the bottom line is that we always take these latest Q&As into account. So basically, when you use our templates, you're kind of also buying the assurance by figure of speech that you always have the latest interpretation. Now, if we go to the next slide, we see exactly how we have designed this. Some of you might, for some of you, this might not be new, but we've looked into what is, let's say, the most granular or detailed report disclosure already out there over the last couple of years, which has a really well adaptation rate. And we kind of borrowed the loan level disclosure template that is also frequently used in the securitization regulation. And we've basically added data elements on top of these templates for basically the green parts. Now, it's important here to note that by combining these two elements, basically the existing templates and the new data elements needed for the EU taxonomy, we have created this engage template or framework, but it's not per se for securitization. It's only focused on the asset parts of the loans. So it's basically totally separate of the kind of transaction structure that these assets are in. So it can be used on the mortgages on your book, a corporate bond securitization, but all kinds of forms. If we go to the next slide, you see basically how we have combined that. So we have extended the typical information that is in the loan or collateral information, and we've extended that with the green data fields. Now, when doing this, we've done, I think, really an interesting part, and that is that we also needed to analyze the EU taxonomy in terms of how the criteria work and what are basically the underlying data ingredients to comply to these individual criteria. And the conclusion is that we had to come up with several data fields that we didn't have yet in existing disclosure. So we've identified these, and these are mainly on the level of the building. And that I think makes sense. If you look at a lot of these criteria, these are mainly related to the energy efficiency profile of the underlying collateral, really the building unit, and they have a little bit less to do with specifically the loan itself. So long story short here is that we have identified the additional data elements that we need on a building unit level and also on a overall, let's say, governance level. And that's basically what we did in this Engage project. If we go to the next slide, you can imagine what I just told you, that has been a lot of interpretation, specifically since this needed to also work, let's say, in multiple countries in the EU. So this was quite an elaborate step, quite some work to do, because we wanted to make sure that our template did not just work in one jurisdiction, but also in other countries. So it works in Portugal, Spain, Netherlands, Germany, Italy, Belgium, etc. So this analysis is also, I think, quite well documented in a guiding documentation. So if you register on our website, you can freely download this guiding documentation. And this exactly explains what we did, what assumptions we made, but also the example that I gave before about incorporating the latest insights of the several Q&As that have been published, so that we always have the most up-to-date interpretation of the EU taxonomy. In the next slide, I want to look into what is the latest version. As Marco already mentioned, that the latest version that we've made available is version 1.2. And it sounds a bit complicated maybe, but version 1.2 basically exists out of two subversions. So we have a template made for Annex 2, that is the collateralized loans, and we have made one for Annex 6, which belongs to the unsecured loans. In this picture here, in this diagram, we have depicted the classification that the EU taxonomy uses. Their construction and real estate criteria are listed in Chapter 7, and it then has several sub-chapters with criteria for new buildings. Then there are several criteria related to renovations. You see this depicted in 7.2 to 7.6. And then there are criteria for existing buildings. Now, what we have color coded in green or in purple has been incorporated in the template. So what we've done here is to be really critical to find really the data elements that are needed to comply to this criteria from all perspectives. So substantial contribution, do no significant harm, and minimum safeguards. And in version 1.1, we really started out with 7.7. I think the most important and probably realistically seen the only applied economic activity generally on a large scale throughout the EU, the criteria for existing buildings. But in this more recent version, we've also added the criteria for those that are interested for new buildings and renovations. Also, we noticed that a lot of the parties that we are talking to also need to report, for instance, on the financed emissions as part of the CSRD disclosure requirements. So these are data fields that we have also added to the template. And lastly, we have also incorporated the EIB Green Checker field, which is basically a variation on the EU taxonomy criteria for renovation with some existing information. Now, this might sound like a lot, but the way we've created these templates is that it is really a modular template. So you can use the modules that you want so that you don't directly have a big overkill in data. And I think that makes it quite scalable and flexible to work with. Now, on our agenda for the future is in the new year. We expect that the EU taxonomy will be updated, so we will incorporate also, if the Commission is on time, hopefully an updated or even simplified set of taxonomy criteria. And we are also assessing if we will incorporate the data elements of the EU Green Bond Standard, since they are very closely related to the criteria we already have in scope. Now, on the next slide, we have a screenshot of the template, which is in the literal sense of the word built upon the existing securitization regulation template as put out by ESMA. So we have added fields to this template and where we have indicated exactly per data element why we need it and in which business rules this data field is checked. So it is the opposite of a black box. You can exactly replicate all the checks that are being done in the portal that we've created and that assesses each underlying individual loan or collateral in terms of the taxonomy criteria. Now, this brings me to the next point, the output. This is a very important part because this is, I think, the big benefit that we offer in Engage is that we have basically one standardized format for EU taxonomy disclosure on a real estate level. That is not really officially part of the EU taxonomy because there you only have the green asset ratio. That is and let's say an overall simplified one number, a ratio that indicates how green all the activities on the balance sheet are. But this is, I think, a very useful step in between to assess the taxonomy in terms of the real estate portfolio, because we have been looking into the annual reports. And most of the green asset ratio in Europe in practice are, well, let's say for 90% based on real estate. So I think this is an extremely useful tool. And that's also the feedback that we are hearing from a lot of the parties. Now, this output is a EU taxonomy alignment report, but another element is the EU taxonomy data quality report that we generate. Now, I've already indicated that most of the additional data fields that we needed to add to comply to the EU taxonomy are based on a collateral level. What we've noticed in a lot of conversation, and this might maybe sound strange or familiar, is that typically most financial institutions do not digitalize a lot of information for loans or mortgage loans on the underlying collateral. So traditionally, of course, you need the valuation amount, the address. You might know what type of building it is, but you hardly have any metrics that relate, for instance, to its climate change vulnerability, its climate change adaptability, the energy efficiency profile, let's say the type of insulation. So we've entered into let's say, a brave new world where we need to identify a lot of new data elements. So the feedback that we are getting is that often it is quite a challenge to gather all this information internally within the banking systems, and that is a very helpful tool that we have this ESG data quality checker or this taxonomy data quality checker. And the good thing about this is that these two are very closely related. So let's say when a loan does not pass a certain EU taxonomy check, we can immediately pinpoint that in the data quality report why this loan or collateral did not pass this check, whether this is a reason in terms of its actual energy efficiency or that there is some, let's say, data quality or data completeness element to it, and the specific check could not even be performed, for instance. So this is really, I think, the real added value that we hear from a lot of the parties that are now working with this template. So you're getting the data good and right, and it can be used for the taxonomy assessment. Now, in the next slide, you see an example here. This is a bit small, so let's go to slide 22, which is a little bit more zoomed in. And you see that we've made this distinction very clear. So we've looked into all the economic activities, these criteria of Chapter 7, in this case 7.71, which is the EPC of Class A. Next, the top 15 assessment. And lastly, also the NZEP -10 check for buildings built after December 2020. So here we have 3 examples of the criteria for existing buildings, and you see exactly in this aggregated report how many loans passed, how many buildings passed, because this relation we have encountered is not always a one-on-one relation in the data, and what the balance is of the checks that have been passed. And we've really separated this, for instance, in loans that pass the substantial contribution criteria and loans that pass the do no significant harm criteria, because we very often encounter that it's not always the case that these two match. So we see a lot of examples, for instance, where a building with EPC A in the end does or is located, for instance, in a area with high flood risk, with a high flood risk profile. So unfortunately, it does not pass the do no significant harm check. Now, I think this is a very welcome nuance that we provide in our template and that the official taxonomy does not provide, that we can really break this down and that we can still see on a very granular level why a certain loan passes or does not pass certain regulatory checks. In the next slide, you see a lot of the, for instance, we have a lot of variations of this insights on slide 23, where you really see this instead of an absolute breakdown, in a relative breakdown. So Maitan, if you can go to slide 23. Yeah, perfect. Now you see this here in terms of numbers. Now this becomes interesting if you draw this picture over time. So you can do that in a portal. You can compare portfolios. You can also, within a certain portfolio, track this, assess these taxonomy alignments through time. So in this particular case, you see that the about 51% of the portfolio passes the EU taxonomy check. So it's quite a green portfolio. But these are exactly the let's say the KPIs that you can track through time in our portal. Yeah, this is, I think, a very important element that I want to also indicate. Here you see a little bit of a breakdown of the engaged template file that contains the additional information needed for the collateral information. Now you see that it's at the first glance, these are quite a lot of fields, 39 to be precise. And this is a little bit overwhelming. That's also the feedback that we get. But we thought it would be good to indicate that our portal only needs, let's say, a handful of these data fields to perform these exact taxonomy checks. And we've indicated these here in this overview. So we've taken the example of the most applied criteria for 7.7, so the EPC Class A, top 15, and NZEP 10% lower than NZEP criteria. And if you really look closely into the fields that are indicated in green, you see that there are only 5 or 6 additional data elements are really actually needed. And the rest of the data fields are a bit of a, well, let's say a nice to have. Of course, for a full taxonomy assessment, as we have seen in the previous slide, we also need to check the do no significant harm criteria. We've also here tried to make that as compact as possible. You see that in purple, it relies on self-assessment by the lender. Much more, I think, sensible thing to do. Also, potentially, since we have received some messages that potentially the do no significant harm criteria for residential loans are to be simplified or temporarily not applicable in the future, but who knows, we'll have to see that. But you see that actually there are not a lot of additional data fields that are needed per se. And also in the bottom half of the screen, you see the data fields that are needed on an individual building level to comply with the CSRD financed emissions. And we have quite some parties that report that as well. You can imagine if you hand this information to the portal, you get the data quality checked, you get really robust results back on why a loan actually passes or does not pass a check, and you get the overall also calculation results back. If you're not happy with it, you can run it again or adjust the data based on the data quality report. But this is also very transparent, for instance, for your stakeholders, such as rating agencies or investors, that can really see how you came to these numbers. And this is, I think, particularly relevant with some of the developments that are currently in the works, for instance, related to EPPD4 and the portfolio standards, whereby potentially the Commission really wants to monitor more closely, let's say, renovation profiles in portfolios. Yeah, then I think we are very well set in the type of data or analysis that you might want to do. And it also allows you, for instance, to compare your portfolio. So different sub-portfolios. And this is also, I think, a very interesting one for investors or stakeholders. So
Thanks,
that,
Vincent.
yeah.
Thanks, Vincent. That's very useful. I can see that we have a couple of questions. First question is the European Commission is now all about simplification. So can we expect, what is your opinion? Can we expect simplification over the course of 2026? And if so, what do you think is going to be the simplification about?
Well, I think first we hope it will be simplified, because in general we've seen with the omnibus proposal the simplifications earlier this year in February. But to be honest, these were, let's say, 99% based on the CSRD and the CS-DDD, and maybe for 1% on the taxonomy. So DG FISMA has indicated to work on this in Q1 and Q2. On the other hand, we also need to be realistic. Sometimes the timelines can change, or more recently with the CSRD and the CS-DDD, we've seen that the simplification effort did not pass in the European Parliament. But I do think still that there are many signs, and also that's what as FISMA indicated, I think 2 elements. One, that specifically for residential loans, and we have to remember a residential homeowner is not an undertaking. It's not a company. The criteria are, let's say, very technocratic and let's say challenging to apply. One of the most, I think, prominent examples of this is that no financial institution in Europe has been able to report renovations as taxonomy aligned in their annual report. So I think that's definitely something they want to tackle, because it's the same commission that has communicated that they wanted to double, triple, or quadruple the renovation rate. So I really hope, I think it's a realistic expectation that some things will be made better.
Yeah.
But we never know.
Thanks, Vincent. Maybe another question for Raffaella, because Raffaella has been looking clearly at the US market. The US market we is not, let's say, so heavy on regulation. You don't have so many restrictions in terms of GDPR. So I would like to ask Raffaella, how much can you replicate your American study in Europe? Maybe in the UK there is a softer GDPR or in other countries. The lessons learned in the US in terms of the climate, the change in terms of the fires, the all the kind of things that we are already seeing, like also more recently all the hurricanes, etc. Is that something that clearly happens also in Europe? But what are the limitations that you experience in Europe when then looking at the data that you use from European data warehouse or other sources?
Yeah, thank you, Marco, for this question. So, first, it's obvious that for US, it's easier to get access to data because exactly there is no GDPR. So, for us, that we want to estimate the models, that makes everything easier. For Europe and the UK, the idea is that what we are doing here, for example, in the UK, is that we are replicating what I present, well, with data provided by banks. So we work closely with some banks, and we build the framework of the climate stress test for them. So we merge the data that they have with the data on natural disaster, and it's obvious that it depends on the area what kind of natural disaster they are interested in. So I think it's obvious that in Europe with the GDPR, that's a sensitive topic, but is something, so we see more from a financial point of view perspective. So it's something that banks can do internally, and for that reason they can use these the data that they are available to build this model. So for that one, the GDPR is not it's not a big issue because they are not using any sensitive information. Then they're also like anonymized data, so we don't need in order to estimate the model, you don't need the actual name or any reference for the mortgage. You just need to know the characteristic of the mortgage.
Perfect, excellent. Because that's exactly also in terms of the data that we typically have under the securitization regulation or also under the cover bond directive.
Yeah.
You have either aggregates or you have anonymized or pseudo-anonymized data, so you can still working with this data because also with the amount of the information that is available, probably you cannot run such precisely, for example, the location of the property, but you can have as for the NUTS code, a kind of still good approximation where the property is, etc. Okay, so let me conclude because we have a couple of more slides on top of what Vincent was mentioning in terms of what you need to do to basically become a data user or someone that can utilize then the Engage templates. So the Engage templates are available online. You can request the templates. You just need to click and on the link on the top. You will receive, first and foremost, you will receive this presentation. Then you can click on the link. You will be then receiving the whole documentation package, which explain not only what the templates but also the documentation, as well as how you can with the sample files how you can report it. Then generally what happens, we set up a very brief 30 minutes call with the Engage team, and then if you want to have access or upload the data or create a private area to review the information that you receive from third parties, you need to sign a standard legal agreement. Then, as Vincent was also mentioning, when you have the data, you can upload it into the portal. You receive a data quality report and the EU taxonomy alignment report. Interestingly enough, you can also enrich the data, do some data remediation, and continue improving the data itself. Next, I think a couple of things. Yeah, here you see in terms of engage, where we position ourselves in terms of the benefits, like a user-friendly format. You can use it for mortgages, you can use it for RMBS, for cover bonds, so it's agnostic. Clearly, the files need to be homogeneous in terms of all resi mortgages or consumers, because then the template is different. But then also, most importantly, if you really have time, not only we have these webinars, but also we have in-person meetings. We will be in Lisbon on Monday, 17th of November in the afternoon. Please come by, also register for the event. And also in January, on Friday the 9th, there is a very important Banque de France event in Paris on Friday. And we will share with you the agenda as soon as we have more details. So I think with this we can conclude the 8th Engage webinar. I would like to really thank Raffaella Calabrese, very interesting work that she has carried out regarding climate change in the US. And also would like to continue. Also thanks to Vincent Mahir in terms of really his help in developing the templates, the portal, and bringing also the Dutch perspective into the initiative. Thank you very much to everyone. You'll get the presentation, and please stay tuned. Thank you.
Thank you. Bye.
Thank you. Bye bye.